Ladies and gentlemen, welcome back to another video. I thought I'd touch on a regional town known as Hamilton. Now, this town has garnished a fair bit of attention from buyers agents and investors alike, and I thought, why not do a bit of a deep dive? Let's look at the data and let's make an informed decision as investors and potential property purchasers whether we should put our capital in this market. Now, Hamilton is a town of roughly about 10,000 people located on the western side of Victoria, actually rather close to the Adelaide border there. If we look at the stats and the data on HTAG, we can see that the median price there is 452,000. I like to look at, cast my eyes over the price growth over the 1, 3, 5 and 10 year mark. Something that does catch my eye as a counter-cyclical investor is places that have gone down in value over a 1 or 3 or 5 year period. I like to further investigate, but that is something that does catch my eye as to why that's happened and whether it is a good opportunity for us to purchase a property in this area. Let's break down the more of the data in the actual Hamilton page. So if we look here, like I touched on, the buy price of 452,000, the rent's about $380 to $400 per week with a yield of about 4.5% there. Now, for a regional area, I prefer yield closer to 5, but that is to your own risk tolerance and further due diligence. So let's have a look at the data and see whether it's worth us taking the risk in investing into Hamilton. So there's a population of about 10,500. Not much for bushfire and flood zone risk at this stage, according to HTAG, but we'll look at the VicPlan map in a second and double check that. If we check the price, typical price growth over the last 20 or so years, we'll see it's been a nice steady increase to the right, meaning slow price appreciation. Hasn't really done too much till about 2019, where it sort of shot up for a few years over COVID, but tell me a place that didn't over that time. Then it did a bit of a lull, had a bit of a dip, and we can see just ever so slightly this worm graph here, this line graph, just starting to track in the right trajectory of upwards, but it is a slow moving worm at this stage. So we can see here that the price hasn't done too much in a year, 0.06% growth, and it's actually regressed backwards 4% over the last 3 years in the typical plot. The price, the rent hasn't done too much either. Again, 1 year, year one, 0% rental increase, and over the 3 year period, about 9% rental increase there. Now, if we look at the fundamentals of this area, it's actually got a 3 for an ersatz score, which is actually not too bad for a smaller regional town. The rent to owner occupier is ideal at 23%, so meaning there's a lot more owner occupiers in this area than there is rentals, and the units to house ratio is a 4%, so healthy across the board there. If we look at the supply and demand metrics, this tells a bit of an interesting story. So on the supply side, we see supply is rather tight. So your stock on market is extremely tight. Your inventory is sitting about just about 1 month worth of inventory on the market. Very, very low building approvals, and the whole period is actually surprisingly just circa 10 years there for a regional town. On the demand side, 43 days on market, not too bad. The vacancy rate is rather attractive for an investor. It's about 0.69%, so very tight vacancy rate. And we can see by the lines here, the short-term trends has been a depleting stock on market, and the days on market have tracked downwards as well, which is pleasing for us to see. Just look at the vacancy rate there, it is extremely tight. Something that I also like to look at is the demand profile and the affordability index. So the affordability index is quite healthy for the local demographic, about 25 years to own the property, and it looks like, according to HTAG, that the 3-bedroom properties are the most in demand, as is usually the case for these sort of regional locations in Victoria. Now, if we look at the VicPlan map, I like to do this together, guys. I don't like to have everything preloaded. So let's apply the overlays together. So just to give you a bit of an idea of how to actually do that, and then we'll look at the flood map and the bushfire map. So we come down here to the land management. Let's click on the flood overlay. Let's click on the land subject to inundation overlay as well, and let's look at the bushfire management overlay. So we can see here we're not really at risk of bushfires in Hamilton, but there does appear to be some sections of this suburb that may come under a flood zone. Again, guys, at your own risk, do your due diligence, but I believe VicPlan's probably got the best map in terms of looking at flood overlays and bushfire overlays in comparison to like New South Wales and Tasmania. But we can see here that there are some properties that are going to fall under that overlay, which will definitely increase premiums. It's actually not too bad, only a little bit on the southern side of Hamilton really. Everything else seems pretty clear of flood and bushfire overlays, which is good news. Now, if we look at open stats for public housing, we can see that there are pockets of Hamilton that you definitely want to avoid. On the eastern side, northeastern side there, looks like very high percentages of public housing. The middle and the southern part of Hamilton seems rather good, and the northwest seems pretty good as well. Maybe there's some pockets here on the western side that you may want to avoid with slightly higher public housing rates, but that is again at your own risk tolerance and your own due diligence. So far, in my mind, there's a couple of red flags, and then there's a couple of trade-offs that you'd have to make. Number one, the population size of Hamilton is rather small, 10,000. It does have potential, some areas in a potential flood overlay. There are pockets of high public housing. Let's have a look at the population and the economy. So I know we've touched on the population being about 10,000, but I just wanted to look at a bit of a trajectory over the last, from 2017 to 2024, and we can see the population hasn't really grown too much as well. Now, that's to be expected of a smaller regional town across Australia, unless it's got some big infrastructure span projects and some big attractions in that area. The population is rather stagnant. I mean, on the plus side, it's not really progressing, but on the flip side, as a trade-off, it's not really increasing too much either, which is going to put a constraint on the supply and demand metrics. So if we look at the industry breakdown of Hamilton, we can see here that the major industry there is the healthcare and social assistance at 22%. Retail trade sits about 12%. Education and training employs about 10% or circa 11% of the population there, with construction rounding out the top four at circa 9%. So look, it is a rather diverse economy for a regional town of about 10,000, which is a good thing to see. And lastly, I'll touch on the infrastructure spend. So I've had a look at the infrastructure pipeline website. There is nothing really coming up at this stage that's been captured on this website. However, it's probably been very recent, but the government have announced for the 2025-2026 budget that they are going to spend 777 million, and that's broken down of roads and transport, 216 million on healthcare, and 100 odd million on education. So guys, my final verdict across the board for us investors looking to invest here, it is a smaller location. It does have a couple of things that I would consider to be a red flag. Definitely the population size of about 10,000 people. Definitely the rental increase hasn't grown too much, and even 9% over 3 years, it's averaging about 3% a year. That's pretty low. And definitely an area where I would consider to be a slower growing market potentially. Now, it has garnished a fair bit of attention, like I said previously, from buyers, agents and investors, but be wary guys. Once investors do move their capital from an area like Hamilton, if there is not a substantial demand for population growth, for infrastructure spend projects, the supply and the demand metrics are going to be in favor of a stagnating market and not a market that's going to appreciate in capital value. So would I invest here personally? No, it doesn't suit my risk tolerance. Now, if you have invested here, that's not to say that you've made a mistake. You can definitely make some money in the short term, but I definitely think it's a higher risk market, a market that if you do buy here, you want to time the entry and then potentially look at timing the exit as well whilst the hype is still there and capitalize on that capital growth. So guys, I hope you enjoyed this video. Please let me know what your thoughts are in the comments, and we'll look to make another deep dive of another area in the regional Victoria market, as that does seem to be taking the spotlight at this moment of time. Until the next video guys, take care.